Stocks could be topping. We will look at the current price action for S&P 500. There is a good chance we could be topping, at least for the time being. We will also look at naked trade and why honoring your stop is a good idea. Gold is still vulnerable in relationship with dollar, and we will look at oil, which could be ready to roll over. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, June 28, 2024. Please hit the like button, subscribe to the channel, share this video, make a comment, or if you have any questions, you can ask them in the comments section. If you are a subscriber, stay tuned. We'll cover quite a bit of various securities, various ETFs, large cap stocks, as well as speculative and gold-related stocks. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can find out more about by following the link in the description. We're looking right now at S&P 500. This is S&P 500 on the daily time frame. Daily means that each of these funny looking red and green sticks is 1 day's worth of activity. On this chart you can see this green, blue, red and yellow lines. These are the indicators that you can get on my site. So this obviously is a very bullish chart. Last opportunity to buy, in my opinion, was back in October, November of last year. This is back in October, November 2023. We had at the time, back in July of last year, this was the all-time high. We had a pullback towards the blue support resistance line. This basically just means that we have a lower risk opportunity to buy. And if you bought it back here, that means you had a relatively short stop towards the yellow line, and you had a relatively low risk of entry. Obviously, it was a very successful trade. I entered myself. I bought S&P 500 back in October of last year. I'm still long. I still have about half of my position remaining. Currently, S&P 500, we're looking at potential top-in candle. So I'm going to zoom in on the latest price action, and it does look like it's like a shooting star candlestick. So a shooting star candlestick is characterized by a tail out of the top right there. You can see it, a red body, close is below the open, and its close is next to the low of the session. This also is a small bearish engulfing relative to the yesterday's candlestick for Thursday, 27th of June. This does look like a top-in candlestick. Is it going to be a top-in candlestick? There's only one way to find out. We have to wait. We can also look at a weekly chart, and that is a weekly chart, or the weekly candlestick right there for S&P 500. Does look like a weekly shooting star or weekly potential doji shooting star candlestick. This just means that close and open were very close to were right next to one another. So yes, indeed, we're looking like it's tapping out. Currently, I wouldn't want to be buying here. Potentially, people who like to try to pick the top, they may want to, open a short position, or potentially open a buy puts, perhaps. But notice that what happened last time, we had sort of similar situation back in March, March of this year, 2024. We also sort of tapped out, pulled back towards this green support resistance line, and then basically we just negated everything and made a new records. Continued to make new records throughout June, and now we're approaching July. We're basically already at July, because Monday will be July 1st already. So very strong run for the stocks, obviously. Some people call it monster run. I agree, it's a very, very strong run. We will continue looking for buying opportunities, but as I will point out in the members only video, we have several indicators that are pointing to a potential top-in pattern, namely a bullish percent index, percentage of stocks above the 200-day moving average, as well as put-call ratio, which is definitely in favor of calls, and usually when so many calls, we see a corrective action. So certainly does look like we're topping out, at least for a short period of time. If we see, this previous correction that occurred in July of last year, it lasted from July until about October, so about 3 months or so. It's quite reasonable to expect that to see. So let's say right now again is June, so maybe we will see a corrective action into September. September is usually a relatively weak month compared to other months of the year, so it's quite possible we will see something of that nature. Is it actually going to happen? There is no way to tell. Perhaps we will not have any corrective action and we will just negate this potential shooting star candlestick and continue higher. However, many signs are pointing to that, namely the divergences, the bearish divergences, of which I will talk in the members only section. So for now, S&P 500 still remains clearly in a bullish uptrend. It will continue to remain in a bullish uptrend until we hit the yellow line, and it is really pretty far away. It's about 1,000 points away from today's price action. So we're about over 20% away from today's high, because we did set a high today. For now, again, we will be treating stocks as where they're still in an uptrend. We will continue to look for buying opportunities. We are looking for buying opportunities. As I just pointed out, notice that there's quite a bit of ETFs, large cap stocks, as well as multitude of various speculative securities that we are looking at as well. So for now, we see a bullish outlook for stocks. But short term, there is no way to tell, or rather, short term there is a good chance we will be pulling back, at least towards the green line. So that pullback would be around 3 to 5% or so. I wanted to briefly look at a trade that is sort of a important if you're trader or investor, and this shows when to cut losses. So this is an actual alert back in 4th of December of 2023. I actually sent it out. This is Nike. So I sent out an alert. We had a very nice run. Target was reached. Notice that we reached this green line. So theoretically speaking, if you're a short-term trader, then you just buy it here on the 4th of December, and you would have probably been able to take profits, or at least partially sell it back in late December of 2023. However, if you are a longer-term trader, you would have been stopped out following this gigantic gap that occurred back between 21st of December and 22nd of December 2023. You would have been stopped out at either a small loss, but if you took some profits, then you would have been stopped out at a relatively small loss. So if I had this trade, if I was buying this trade, if I was opening this trade in December of 2023, I would have been stopped out on the 22nd of December 2023. Notice that what happened afterwards, the stock continued down. It went down towards the red line, and that red line implies caution in my system. At this point, caution just means that we need to be ready to exit, regardless of our feelings about this trade, regardless of our feelings about this stock. if you didn't exit, notice what happened afterwards. The stock continued lower, and again, here on the 22nd of March 2024, this year already, it went below the yellow line. So at this point, it is an absolutely get out, get out of the stock kind of thing. So this, I sent everything out. I sent the caution, I sent the avoid, and hopefully you took those warnings. So notice what happened today. We had Nike report its earnings. They were not even that bad. In fact, they surprised on the earnings, but they underperformed on the revenue by a small percentage. There's more in the guidance, I think, but notice what happened. The stock gapped down close to 20%. So if you exited where I said back in December of 2022, 23 rather, then you would have had potentially a very small loss, or maybe even a break even, depending if you took profits. If you didn't, then you would have had, today, let's say today you throw in the towel and you say, that's it, I'm done. You are exiting today, you would have been 30%, you would have had a 30% bigger loss. Even if you exited back in March of this year, 2024, when I sent the avoid alert, you would have still been better off. You would have been, because today, another 20% down. Do you see what I'm trying to say? So this is what's called honoring your stop. If your stop is hit, you have to get out. And it's a tough kind of thing, to admit mistakes, tough kind of thing to admit that, the stock that you picked is not going the way you wanted to go. But very often when the stop is hit, you need to get out, because sometimes the loss gets bigger and bigger and bigger. This happened to me on multiple occasions. I got out, and then I saw the stock collapse even further. So always now I honor the stop. I never let this happen. Let the stop pull the stop back, because you don't know where the stop is where the stock will drop to. And in this case, it really collapsed. 20% down is a significant loss for a major company. Nike is a major player. It's a Dow stock, if I'm not mistaken. So this is sort of a public service announcement. Honor your stop. When your stop is hit, you need to close your position and move on with your life. Let's move on to the dollar and gold. So dollar, as you can see, upward facing arrows. Dollar is currently in an uptrend, although some would say that it's sort of just in this giant range and it's not really going anywhere. According to my system, there's still currently a bullish bias. So bullish bias just means that we are thinking about buying. We're looking for buying opportunities for the dollar. If you trade things like euro versus US dollar, you would be buying the dollar using other currencies. Forex trading is quite different than trading stocks. Honestly, I don't recommend it for beginners because of the leveraged nature of Forex trading. Also, the stops are tighter and the targets are, stops and targets are tighter. You need to get kind of quicker moves, basically. Just looking at this from a purely educational point of view, dollar is currently in an uptrend. Notice latest up arrow was right there on the 13th of June, and notice that it was successful, so we had a move higher. In fact, dollar is threatening to break out above this highs from April. And if it does break out from above the highs from April, I think this highs also will not hold from October 2023. So I think dollar will continue higher. Why that is happening is an entirely different story. We don't really worry about it that much in technical trading. But the fact of the matter is, yes, dollar is currently in an uptrend. Why do we care about dollar? Because we trade gold. So looking at this chart once again, gold in the upper pane here, dollar in the middle pane here in green, and down below here in purple is the correlation coefficient. So correlation just means how much does the dollar and gold move together in lockstep. Do they move in the same direction? Do they move in opposite directions? If you look at this chart, you can see that more or less dollar moves opposite to gold. You can see that the vast majority of the time it spends its time in the negative correlation territory. Occasionally it goes into the positive territory. So currently we have that same situation around 70% of the time, 70% of the time, dollar and gold are moving in the same direction. What does that mean for current posture on gold? So we're currently looking at gold XAU divided by USD. So in a normal world, when dollar goes up, gold will go down. Dollar goes down, gold will go up. It's not a normal world currently. We have both gold and dollar more or less going higher. Okay, so dollar or the gold has made a new all-time record on May 20th of this year, 2024, and sort of been just kind of trading sideways to down. Important is this candle from June 7th, right there where I'm hovering. So it seems to be providing some sort of a support, because notice that we had a pullback towards that level, and so far that support is holding. Above there is this green line which is trying to provide resistance. So it's been just really going up and down, not really any trend on a short-term scale. However, I think if we break this lows from 7th of January, I'm sorry, 7th of June, this is 7th of June lows, then I think we will continue lower. And the most logical place to continue lower would be around the blue line. So the blue line is basically where we want to be thinking about buying gold. And this is exactly what happened before. Notice that upward facing arrows. Gold was bought around those around that area. These are actual alerts. We were buying gold here. So right now, if that pullback will materialize, it would likely mean a buying opportunity for gold once it gets to the blue line. Right this instant, it's really ambivalent. I don't really want to be buying it, nor I don't want to be selling it short. Additionally, if dollar continues to rally in a normal world, if the correlations go back to normal, so correlations would be negative once again. If dollar continues to gain, it should weigh on gold. So if dollar breaks out higher, then gold would be it will be more difficult for gold to continue. Why? Because XAU divided by USD. So USD, the bottom part of this equation, will be pulling this currency pair lower. And if dollar strengthens, it will pull this currency pair lower. So for now, I'm just watching this action. And if we see a break below the June 7th low, very likely we will continue towards the blue line, which is currently around 2,200. So a pullback towards 2,200 cannot be ruled out. At that point, we'll need to make another decision of whether or not we want to be buying. And before, we were buying it, and it was very successful. You can see buying opportunities around the blue line. So that's basically the situation with gold and dollar. We're waiting for gold to pull back. If you are a forex trader, then you can also trade various currency pairs using this information. Dollar is going up, so we want to be buying the dollar basically with other currencies. And let's look again at crude oil, light crude oil, ticker symbol CL1 exclamation point. So crude oil broke below this red support resistance line on May 22nd of this year. I actually shorted it myself. This white arrow is where I sold it short. I made a little bit of money, but it kind of stopped a few days later, around June 3rd. And I basically got out at that point, or I took profits and then I got out eventually. And right now you see that it's a pretty strong move, kind of like a rebound. We went above this red support resistance line. We so far had no signal. So the signal per my system occurs when we see a close below the red line for commodities. We're trading commodities now. So if we see a close below the red line, that would be a signal to sell it short. And right now we're literally in the middle. We're between the blue and red line. Blue line, if we close above it, then we want to be buying it. If we close below the red line, we want to be selling it short. Having said that, we already have tried on multiple occasions for oil to break below these levels. And I kind of marked them here with this rectangle. So it seems like the price floor for oil is somewhere between $63 and $71. Why is that so? Is that because notice that basically we tried on multiple occasions to break below these levels. Notice this candlesticks that are trying to kind of break below this 63, 68 dollar area. Latest attempt, or the attempt before that was in December of last year to break below this level, somewhere around $69, $70. And then another attempt right there where I'm hovering this June of this year. We got down as far as $72 or so. And so far, again, we have failed. So there seems to be some sort of a floor for pricing for crude oil around this area. It doesn't mean we can't go lower. I mean, we did go to negative during the pandemic, and we can probably do something of the same nature if there is enough either supply of oil or the demand all of a sudden drops off. Can the demand drop off? Sure. If the recession hits or some sort of a calamity hits, yes, we can have a demand drop off. Can the supply increase? Sure. Perhaps there's going to be a resolution for all of the conflicts in the world, which I'm literally praying for every day. However, it doesn't seem likely at this point. So crude oil is unfortunately still a very important commodity. Right this instant, I'm not sure what to do with it. I would probably just do nothing with oil at this point. I want to be waiting. I'm going to wait until either we break above $84 or break below 77. If we break below 77, we could potentially sell it short. If we break above 84, then we potentially buy crude oil. But at this point, I really don't want to do anything with it. That's it for this week's recap. Let me know what you guys think about any of the securities that I discussed: S&P 500, Nike, dollar, gold, oil. If you're not yet a subscriber, head over to MasterChartsTrading.com. Click on sign up for one of the products. So I have two products and one bundle. Trading indicators are these lines on the chart, this green, blue, red, and yellow line. You can have them on your TradingView account. TradingView is free. Once you sign up for a free TradingView account, come over to my site, MasterChartsTrading.com, sign up there, and I will open the door for you on TradingView.com. I know it's convoluted, but that's the only way it works. If you want these lines on your chart, you gotta do what I just said. If it doesn't make any sense, send me a message. Go to my site, MasterChartsTrading, click on help, click on contact, send me a message. I'll help you out, not a problem, very easy. If you just want the newsletters, you don't really want to, have your own indicators to trade on your own. You just want to hear what I have to say about the various securities, then you will be able to get various alerts. I send out daily alerts about various ETFs, large cap stocks, speculative securities, as well as gold related securities. I send out daily alerts as well as a weekly newsletter, weekly video, which I'm about to record. So if you're a subscriber, stay tuned. And of course, the best deal is to get both trading indicators and newsletters. And I think the best deal is to sign up for a year at equivalent of $49.95 per month or $599.95 per year. If you buy a monthly subscription, that would be $59.95. So you get a 17% discount. Let me know what you guys think. Make a comment in the comment section below. Again, thank you for watching and have another great trading week. Bye-bye.